Guys, this metal is set to explode, and it's not gold and silver. We're facing a metal shortage that no amount of money can fix quickly. And the earnings reports that just dropped are telling us exactly where the smart money is moving right now. I've got one specific stock that I'm going to share with you later in this video that's perfectly positioned to take advantage of this shortage. And if you understand what's happening, you're about to see one of the biggest moves in the commodities market this year. Now, before we dive in, the only thing I ask in return for all the work that goes into making a video like this is that you hit that like button and don't forget to subscribe. Every time you do that, YouTube goes and pushes this video out to more people, which helps us prepare more people for what's coming. And if you want access to my best trade of the day, handpicked by me, and daily recordings on market analysis that cover any questions you ask in the community, you can try my Discord, the Stocks Community, for just $25 for 7 days at stockscommunity.com. We break down these exact setups in real time every single day. And if you're looking for a free resource, head over to free.stockscommunity.com where you'll be able to sign up for my free newsletter and get market updates that I can't share here on YouTube due to the sensitive nature of the content, some of which involves government figures and their stock portfolios that YouTube can sometimes restrict on its platform. The link is in the description below. As always, if you're the one making the actual purchases and sells, you have to do your own diligence as well. Take your time, be cautious. This is not financial advice. I'm just sharing my research and you have to make your own decisions. Now let's get into it. So here's what just happened that most people are missing. We had the Federal Reserve meeting this week, the FOMC, and everyone was focused on interest rates. Are they cutting? Are they holding? What did Powell say? And look, I get it. Interest rates matter, but here's what nobody is talking about. The connection between rate cuts and metal prices is way more complicated than people think. Everyone assumes lower rates mean higher metal prices, but that's not always true. It's actually pretty weak. Let me explain. When the Fed cuts rates, people say, oh, that's bullish for gold. That's bullish for silver. That's bullish for commodities. Why? Because lower rates mean a weaker dollar. And when the dollar gets weaker, things priced in dollars go up. That's the theory. But if you actually look at the data, the connection is shaky. Sometimes rates go down and metals go up. Sometimes rates go down and metals go sideways. Sometimes rates go down and metals actually go down. Why? Because metals don't move just on interest rates. They move on supply and demand. They move on actual physical shortages. They move on real economic activity. And that's what I want to focus on today. Not the Fed meeting, not interest rate predictions, but the actual physical shortage that's developing right now that has nothing to do with what Jerome Powell says. Here's what's really happening. There's a metal that's absolutely critical to everything we're building right now. Data centers, electric vehicles, power grids, solar panels, wind turbines. All of it requires massive amounts of this metal, and we're running out. The shortage is so bad that one of the biggest companies in the world just did something crazy. They went out and bought an entire mine. Not the metal, the actual mine. Because they don't believe they'll be able to buy what they need on the open market. That metal is copper. And we're about to see a massive supply crunch that's going to send prices way higher. Now, I know what you're thinking. Sam, everyone's been talking about gold and silver. Those went parabolic. Gold hit $5,180. Silver hit $91. Why should I care about copper now? Because gold and silver already had their run. Those trades are crowded. Everyone knows about them. Everyone's already in them. The smart money is rotating. They're moving into the next opportunity, and that opportunity is copper. Let me show you what's happening. This week, we got earnings from a company called Seagate Technology, ticker symbol STX. They make memory chips and hard drives, and they absolutely crushed their numbers. Revenue up, earnings up, guidance raised. The stock gapped higher, and it's holding those gains. Now, you're probably asking, Sam, what does a memory chip company have to do with a metal shortage? Everything. And I'm going to explain exactly why. When Seagate reports blowout earnings, what they're really telling you is that data center demand is exploding. See, memory chips don't go into regular laptops anymore. I mean, they do, but that's not where the growth is. The growth is in massive data centers. Amazon Web Services, Microsoft Azure, Google Cloud, Meta, all of these companies are building out huge infrastructure to support AI, and AI uses a ton of memory. Every time you ask ChatGPT a question, every time you create an image with AI, every time a company runs data through these systems, it requires massive amounts of memory. And Seagate's earnings are telling us that this build out is speeding up, not slowing down. They raised their guidance for next quarter. That means orders are coming in faster and faster. Now, here's where copper comes in. To build a data center, you need servers. To run those servers, you need power, tons and tons of power. A single AI question can use 10 to 100 times more electricity than a regular Google search. We're not talking about the old internet anymore. We're talking about AI processing that runs chips so hot they need special cooling systems just to keep them from melting. And every single piece of that infrastructure needs copper. The power lines bringing electricity to the data center, copper. The transformers, copper. The wiring inside connecting all the servers, copper. The cooling systems, copper. You cannot build a modern AI data center without massive amounts of copper. It's not optional. Amazon figured this out before anyone else. Amazon Web Services just did something wild. They signed a deal with a mining company called Rio Tinto to reopen a copper mine in Arizona that's been dead for over 10 years. The Johnson Camp mine hasn't produced copper in more than a decade. Amazon is literally bringing a dead mine back to life. Now, think about that for a second. Amazon is one of the smartest companies on earth. If copper were easy to buy, they would just buy it. Instead, they're getting into the mining business. They're reopening a dead mine to lock up private supply. Why? Because they don't believe they'll be able to get the copper they need later. They see the shortage coming, and they're securing supply before everyone else wakes up. This is like a modern gold rush, except the gold is copper. And without it, there is no AI revolution. When tech companies start becoming minor, something very big is happening, and the Seagate earnings are confirming that this build out is speeding up. Let me give you the numbers on this shortage because it's actually crazy. The world is projected to face a copper shortage of 10 million tons by 2040. That's 33% of what we use now. Copper demand is going to jump to 42 million tons per year, and Asia alone is going to represent 60% of that growth, driven by things like electric cars and upgraded power grids. One of the greatest investors ever, Stanley Druckenmiller, said, quote, "I've never seen a better setup in my life." He's talking about copper. The supply and demand situation is so tight that he thinks it's going to explode. Another billionaire, Robert Friedland, put it even better. He said, "We use 30 million tons of copper per year. Only 4 million tons gets recycled. That means to keep the economy growing at 3% with no new electric stuff, we have to mine the same amount of copper in the next 18 years that we mined in the last 10,000 years." Let that sink in. In the next 18 years, we need to mine as much copper as humans mined in 10,000 years of history. And that's just to keep things going as they are. That's not counting more data centers, not counting more electric cars, not counting solar panels or wind turbines. Robert Friedland said, You people have no idea what we're facing. You just can't own enough copper. So when Seagate reports great earnings and raises guidance, what they're really telling you is that data center construction is speeding up. And that means copper demand is speeding up. This is a direct connection. More memory chips sold equals more data centers being built. More data centers equals more copper needed. It's that simple. Now, let me explain why this has nothing to do with interest rates. People think lower interest rates automatically mean higher copper prices, but that's not how it works. Copper doesn't go up because rates go down. Copper goes up because people need it, and there's not enough of it. That's supply and demand. That's basic economics. Even if the Fed holds rates steady and they never cut again, copper's still going higher. Why? Because the shortage is real. Amazon wouldn't be reopening dead mines if the shortage wasn't real. Seagate wouldn't be reporting record orders if data centers weren't getting built. The physical demand is there regardless of what happens with interest rates. In fact, some of the best commodities bull markets happened when rates were going up, not down. Why? Because rising rates usually mean the economy is strong, and a strong economy uses more copper, more factories getting built, more infrastructure projects, more construction. All of that needs copper. So don't get distracted by the Fed meeting. Don't get distracted by what Jerome Powell said about rates. Focus on the actual physical reality. We're in the middle of a massive build-out. AI infrastructure, electric vehicles, power grid upgrades, all of it requires copper, and we don't have enough. Now, let me talk about mining because this is important to understand. It's not like we can just go dig up more copper tomorrow. It takes 15 to 20 years to bring a new copper mine online. You have to discover it, drill it, get permits, build roads, build infrastructure, bring in power. It's a massive process. Even if we started 10 huge projects today, they wouldn't produce any meaningful copper until the late 2030s. And the mines we have now are getting worse. The easy copper is gone. In the old days, you could dig up rock that was 5% copper. Now, you're lucky if you get 0.5%. We're moving mountains of rock just to get tiny amounts of metal. That's why Rio Tinto is using bacteria to extract copper from old waste piles. They're literally mining the trash because there's nothing else left. This is why the shortage is so serious. Demand is going up fast, supply can't keep up, and it takes decades to fix. Copper hit $6 per pound recently. For most of the last 10 years, it traded between $2 and $4. This is a breakout. This isn't a top. It's like buying gold at 2000 or silver at 40. We're in the early stages of a major move. And unlike gold, copper doesn't rise because people are scared. Copper rises because people need it. You can choose not to buy a gold necklace. You can't choose not to wire a data center. You can't choose not to power AI infrastructure. Demand is not flexible. Whatever the price is, people have to pay it. Amazon proved that by getting into mining. Now, let me also talk about what's happening in the markets more broadly because this ties in. For the last 2 years, everyone was focused on tech stocks. Nvidia, Microsoft, Google, Meta. Mag 7 dominated everything. Everyone was watching semiconductors. But now we're seeing a shift. Money is rotating out of those stocks and into real assets, into commodities, into physical things that are scarce. Gold and silver went crazy because people are worried about the dollar losing value. They're worried about inflation. They're worried about the government printing too much money. And those moves were huge. But now those trades are crowded. Everyone knows about gold and silver. The next wave is industrial metals, the metals that actually make the economy run. Copper, platinum, uranium. These are what smart money is rotating into, while regular people are still chasing gold and silver. Tom Lee from Fundstrat, a big research firm, said his top picks for this year are energy and basic materials. Not tech, not finance, basic materials, and copper is the king. of basic materials right now. Another trader, Tony Greer, who has decades of experience, said he's bullish on copper, bullish on platinum, bullish on all the industrial metals. Why? Because we're seeing a big change in markets. We saw this clearly during what people called Trump's Liberation Day. The market had a huge swing, 1,000 points in the S&P in one day. And when everything settled, what stocks were leading? Gold miners, industrial miners, uranium miners, copper miners. That's showing you where the smart money is moving. And the Seagate earnings confirm this is the right move because the AI build out still has to happen. It's just that the bottleneck isn't chips anymore. The bottleneck is power. The bottleneck is cooling. The bottleneck is infrastructure. And all of that infrastructure is built on copper. Let me give you some more context on the demand side because it's not just AI. Electric vehicles use 3 to 4 times more copper than regular gas cars. Wind turbines use 4 to 5 times more copper per unit of power than coal plants. The power grid itself is ancient. The US alone is spending over $400 billion upgrading it. Just the grid upgrade by itself could need 15 million tons of copper by 2030. So you've got AI, electric cars, wind and solar, grid upgrades, all of them fighting over the same limited pile of copper. And production can't keep up. This isn't speculation. This is basic math. Demand is going up fast. Supply is stuck. Prices have to go higher. Now, some people will say, well, Sam, can't we just recycle more copper? Sure, we recycle about 4 million tons per year right now, but we use 30 million tons. So recycling helps, but it's nowhere near enough. We're consuming way more than we're recycling. The gap is huge. Other people say, what about alternatives? Can't we use aluminum or something else? Not really. Aluminum doesn't conduct electricity as well as copper. It expands more with heat. It creates fire risk in buildings. For most uses, copper is the only option. There's no good substitute. This is why the shortage is so serious. And this is why Amazon is reopening dead mines. They see what's coming. They're not waiting for prices to spike. They're locking up supply now. All right, now let me get to the specific stock that I think is the best way to play this. The company is called Southern Copper Corporation, ticker symbol SCCO. This company just reported some of the best earnings we've seen in the copper sector. Sales crushed expectations. Earnings crushed expectations. The stock popped slightly on the news and then pulled back a bit as some people took profits. But here's what the market is missing. This isn't just about one good quarter. This is about a company that's perfectly positioned for a massive move in copper prices. Southern Copper is one of the largest copper producers in the world. They're headquartered in Phoenix, Arizona. They operate some of the most productive copper mines anywhere. And unlike a lot of mining companies that produce multiple metals, Southern Copper is focused. They're a pure copper play. When copper prices go up, their profits go up in a big way. Let me explain. This is how it works, because this is important. Mining is expensive. You have labor costs, equipment costs, maintenance, permits, environmental compliance. All of these costs are relatively fixed. Mining companies track these in something called all-in sustaining cost. For most big copper producers, that number is around $3 per pound. So if it costs $3 to dig copper out of the ground and they sell it for $6, they make $3 profit per pound. Now, let's say copper goes from $6 to $9. That's a 50% increase, but their costs stay at $3. So now they're making $6 profit per pound instead of $3. Their profit doubled even though copper only went up 50%. That's called leverage. And it's why mining stocks move way more than the metal itself. Last year, gold went up 65%, but gold mining stocks went up 153%. The leverage works. And Southern Copper's earnings last week showed this exact thing happening. Costs stayed pretty stable while revenue exploded because copper prices have been climbing. Copper is at $6 per pound right now. For most of the last decade, it was between $2 and $4. We're breaking out. And if copper goes to $7 or $8 or $9 over the next year or two, Southern Copper's profits are going to explode. Every dollar increase basically doubles their profit because costs are fixed around $3. Here's what makes Southern Copper special. They have multiple new projects in the pipeline. They're not just sitting on old mines. They're expanding, they're growing, and their balance sheet's solid. They can fund these projects without taking on a ton of debt. That's important because when copper prices do spike, they'll be able to take full advantage. They also have some of the lowest costs in the industry. Their all-in sustaining cost is actually below $3 per pound. So they're more profitable than most of their competitors at current prices. And when prices go higher, their advantage gets even bigger. Now, let me mention a couple other options just so you have context. Freeport-McMoRan, ticker FCX, is the largest U.S. copper producer. They run the huge Morenci mine in Arizona. If you want the safest, most established play, that's FCX, but Southern Copper has better margins and more growth projects, which is why I prefer it. If you want a higher risk, higher reward option, there's Taseko Mines, ticker TGB. This is a smaller Canadian company whose stock is up over 90% in 3 months. Their Florence copper project in Arizona is about to start producing with some of the lowest costs in the industry. Almost 100% of their output is copper, making it one of the purest plays out there. But it's small and volatile, so you have to be careful with position size. And if you want broad exposure to the whole sector, there's the Copper Miners ETF, ticker COPX. It holds Southern Copper, Freeport, Taseko, and about 58 other copper companies. That gives you diversification across the entire industry. But for most people, I think Southern Copper is a sweet spot, big enough to be stable, small enough to have upside, great earnings, great operations, and perfectly positioned for the copper shortage. Now let me talk about timing because this matters. I don't think this is a quick trade. I think copper is a multi-year bull market. We could see $7 per pound. We could see $8, maybe even higher. And if we get there, Southern Copper stock could double or triple from here. The math works out, and the catalyst is already in motion. Amazon locking up supply, Seagate reporting blowout earnings showing data center demand is accelerating. Governments around the world upgrading power grids, electric car adoption continuing. All of these trends need copper, and all of them are speeding up, not slowing down. Let me also address some risks because I want you to understand what could go wrong. Risk number one, what if copper prices don't go higher? What if supply somehow catches up with demand? Here's the thing, it takes 15 to 20 years to open a new mine. Even if we started 10 massive projects today, they wouldn't produce copper until the late 2030s. Existing mines are getting worse. The easy copper is gone. That's why Rio Tinto is using bacteria on trash piles. The supply situation is not getting better anytime soon. Risk number two, what if the AI build-out slows down? What if data center demand drops? I think that's unlikely based on what Seagate just reported. But even if AI slowed, you still have electric vehicles. You still have wind and solar. You still have the grid upgrade, which needs $400 billion of investment. By 2030, just the grid could need 15 million tons of copper per year. So even without AI, demand is strong. Risk number three, what if Southern Copper specifically has problems? That's always possible with individual companies, but they just reported strong earnings, multiple projects in the pipeline, solid balance sheet, good management. The company is in great shape. So here's how I would think about this. And remember, I'm not telling you what to do. You have to make your own decisions. But Southern Copper at current prices looks like a strong opportunity. The earnings last week confirmed operations are solid. The Seagate earnings this week confirmed the demand driver is real and speeding up. Copper is breaking out to multi-year highs, and we're early in what could be a massive bull market. If you position now, you're getting in before most people understand what's happening. You're getting in before CNBC is talking about the copper shortage every day. You're getting in before the stock has already doubled. That's when the best opportunities happen, not after everyone knows about them. Stanley Druckenmiller doesn't say he's never seen a better setup lightly. This guy's been investing for 50 years. He ran George Soros' fund. He's seen every market cycle, and he's saying copper is the best opportunity he's ever seen. That should tell you something. Let me bring this all together. We're in the middle of a huge shift. Capital is rotating out of tech stocks and into real assets, into commodities, into things that are scarce and necessary. Gold and silver already had their move. Those trades are crowded. The next wave is industrial metals, and copper is leading the way. The shortage is real. Amazon is reopening dead mines to lock up supply. Seagate is reporting record orders showing data center construction is speeding up. Demand is going to hit 42 million tons per year. We're facing a 10 million ton deficit. Copper prices are breaking out, and mining stocks give you leverage on that move. Southern Copper just reported great earnings. They have multiple projects coming online. They're one of the lowest cost producers in the industry, and they're a pure play on copper, which means when copper moves, the stock moves even more. Don't wait until copper's at $9 and the stock has already doubled. Position now while the setup is still early. Position now while most investors are still focused on gold and silver. By the time everyone figures this out, the easy money will be gone. And if you want access to my best trade of the day, handpicked by me, and daily recordings on market analysis that cover any questions you ask in the community, head over to stockscommunity.com. Try my Discord, the Stocks Community, for just $25 for 7 days. We break down setups like this in real time every single day. Plus, if you want the full transcript of this video and future videos, sign up at free.stockscommunity.com. The link is in the description below. So, what do you think about this copper thesis? Do you think Southern Copper is the right play? Do you think the Seagate earnings confirm what's happening with data centers? Let me know in the comments. I love hearing from you. But that caps off today's video. If you found this valuable, smash that like button, subscribe to the channel, share this with somebody who needs to hear it, because the opportunity is now, and the people who position correctly in copper are going to make serious money over the next year or two.